What is up, YouTube? Tim Layton here, and welcome back to my YouTube channel. If you're new here, thank you for coming. It means a lot. So today we're going to be going over the PPI, the Producer Price Index, otherwise known as producer inflation. So what we're going to talk about is the difference between the Producer Price Index and the Consumer Price Index, as well as the importance of the PPI. And then once we feel comfortable with the PPI, what it is, why it's important, we're going to talk about the report that came out yesterday. So with all that being said, let's jump right into it. Alright guys, so before I jump into the CPI and the PPI, I feel like it's important to discuss the whole goal, the whole purpose of the Fed, the Federal Reserve, the people in charge of our money. Now their goal is simply to keep us consumers, me and you, safe and comfortable financially. They want to make sure inflation doesn't skyrocket to the point where we can't afford anything, but they want to make sure that inflation stays high enough that incentivizes us to invest in the stock market and to spend our money on assets like houses. They want to try and keep interest rates at a low enough level that everybody can afford a house and a car, or as many people as possible, but not so low that everybody's buying houses and the housing market skyrockets. And lastly, they want to create an economy that encourages wage growth, encourages companies to pay their employees more so that everybody's comfortable, everybody's happy. That is the whole goal of the Fed, is to balance those things and make the consumers, make me and you very comfortable. And that brings me to the importance of the CPI and the PPI. Alright guys, so the CPI, Consumer Price Index, is the inflation that me and you see on a daily basis. It shows us how much more expensive the things we regularly buy have become. But it's what's called a lagging indicator, meaning it comes out too late to do anything useful with it. Because the Fed's whole goal is to protect us from high inflation. And the CPI gets released for the previous month's inflation. In February, the CPI and the PPI came out for January. So what are we supposed to do with that information? It already happened. Last month, the Fed already failed at their job. So it's not really a useful indicator. All it really says is the Fed releases it and goes, hey guys, this is how bad we were at our job last month. We'll try and do better next month. That's all it really is. But this brings me to the importance of the PPI, the Producer Price Index. Alright, now the PPI, on the other hand, is what's called a leading indicator. Now you might be asking yourself, Tim, what the fuck? You just told me that it gets released a month late. How is it possibly a leading indicator? It shouldn't be a leading indicator unless it tells the future. But that's the beautiful thing, is it does tell the future. Because the PPI, the producer inflation or company inflation, comes before consumer inflation. It's what causes consumer inflation. So by looking at what producer inflation did last month, we can get a pretty good idea of what consumer inflation is going to do 4, 5, 6 months down the road. I'm going to put it into a little timeline for you guys. Alright, so let's say right now, we're in February, the PPI just got released. All these companies are going to look at this PPI result and go, shit, our inflation was really high in January. Now they're going to take about a month to strategize. How are we going to get our money back? What are we going to do? And they're going to figure out, oh shit, we just got to raise our prices. Then they're going to spend another month or maybe even 2. How much do we raise our prices? What products do we raise our prices on? How much do we raise prices on these individual products? Now, they figured it out. Now they're going to spend another month or 2 implementing that price change. They can't just switch it overnight. They got to implement it. They got to make those products, send it out to the companies, sell it to those companies for more. And then those companies are going to raise the prices on you. It's going to take a while. So 3 to 6 months after a high producer inflation or a high PPI, it gets passed to me and you, the consumer, in the CPI, consumer inflation. And that's what makes it a leading indicator. And that's what makes the PPI so important. But for some stupid psychological reason, the stock market doesn't really care about the PPI. That's because the stock market is always focused in the here and now. They're not worried about 4, 5, 6 months down the road. That's why they care so much about the CPI. Because the CPI gets released and it says, oh my god, we're fucked right now. Where a high PPI goes, okay, we might be fucked in 4 to 6 months. We'll figure it out down the road. And you can do with that information what you will. I'm not going to tell you how to handle this information, but just know that you can somewhat see into the future about what's going to go on in 4 to 6 months' time. Use that information wisely, use it to your benefit. All right, so now that we got the complexities of the CPI, the PPI, producer, company inflation, and consumer, me and you inflation, now that we got that understood as best as we can, let's dive right into this report. So the PPI for the month of January came in at 1%, which in case you don't know is extremely high. The estimate for the PPI was 0.5%, meaning it was double, twice as high as it was expected to be. Now that led to a year-over-year increase of 9.7%, which is almost a record high. So now what does this mean for the CPI or the stock market? Well, without a doubt, it means the CPI will increase throughout the coming months. And that comes at a bad time since the Federal Reserve, is doing everything they can to lower inflation. We got the high PPI that's saying, hey, we're going to keep raising inflation. And then you got the Fed saying, no, you will not. We need it to go down. And I fear that this is going to snowball and keep getting bigger until it kind of screws us a little bit. Now, the reason that scares me is because in March, the Fed is going to raise interest rates for the first time. Now, we don't know that for sure, but it's a 99.9% chance that it's happening. And they're going to want to see the next coming months inflation go down. But as we could see from the January PPI, March, April, May, June, the CPI is probably going to go up. Now that's going to scare them. They're going to say, we just raised interest rates and it's not working. What do we do? And then come June, they're going to say, we need to raise it more. We need to raise interest rates twice as high, 3 times higher. Like, we need to stop this. And then they're going to skyrocket the interest rates until me and you can't afford to buy a house or buy a new car because the interest rates are just too damn high. Now, these high interest rates are going to slash the profits of companies that rely on us taking loans out to buy their products, especially automotive companies. Now, that's going to sink the stock market. And that, in my mind, is my worst case scenario. Now, if we look at the best case scenario, what I'm hoping is going to happen is that the Fed's going to see these PPI numbers right now. Now, they're smart. They went to college for this. This is their job. And they're going to know that that's going to mean a higher CPI in the future, in months to come. And they're going to take that into account. They're going to raise interest rates in March and say, hey, we might see higher inflation in April, May, and June, but that's just from before we raised interest rates coming into effect now. We're not going to panic. We're going to stick to our plan, whatever they laid out beforehand, and keep implementing that until eventually inflation eases, calms down, and we're back to a slow, steady growth in the stock market, just like we should be. Alright guys, well that is it for my video. That is the CPI, that is the PPI, that is the report that got released, and in my opinion, those are the best case and the worst case scenarios of what could happen. If you enjoyed this video, if you learned something new, please give it a like. It's not that hard, just one little click, that's all it is. And if you want to see more videos like this, please consider subscribing to my channel. Because in my opinion, I'm getting better at making videos every single day. And they're only going to get better from here. So if you like this one, you're definitely going to like the one next month, 2 months from now. So that's all I got for you. I'm done with my shameless plug-in. Anyways, thank you for watching today's video, and I will see you guys tomorrow.